Good morning, good afternoon, good evening. Welcome back to the channel where we talk about economics and crypto and lots of other fun things. Thank you, as always, for making me a part of your day and your week and your month and your year and all that. And before we dive on in, do me a favor, hit that like button, subscribe to the channel, and leave a comment in the comment section, all for the algorithm. But without further ado, let's get on into this. So, Bitcoin and 30-day volatility. Interesting chart here. The last time Bitcoin volatility was this low, it was nearing the bottom and end of its consolidation range before ripping from 52K to 108K. There's going to be some things that I talk about in this video that just highlights. The big thing is, sure, yes, this is bullish looking at how low volatility is right now. But the interesting thing about this rally that sticks out from previous rallies is that the move in November to December of 2024 was a belief rally. The move in early 2024, January, February, March, that was all full on belief. We're going to make millions. The move in November of 2023, if you remember that, breaking out of that 200-day range that we were in from between $25,000 and $31,000, there was a lot of belief in that rally. This rally, the level of interest, the low levels of interest, if you do Google search, you'll find very little interest as we're flirting with a new all-time high with Bitcoin. The lack of so many things. This is a disbelief rally. This is a low volatility rally. And so this is unique for this run. It's something. It's something that has me bullish right now for the time being, because where's the excitement in the market? I think it's due to the fact that Bitcoin is performing a lot better than altcoins, and most people have altcoins, but we'll see. So let's look at the chart here. This chart's terrible, by the way. This makes it look like the last time it was this low was end of 2023. No, this 2024 marker is like the middle of 2024. So that's July 1st of 2024. Ridiculous. This is so dumb. Why would you do that? But anyway, you can see last time volatility was this low was the end of June 2024. So we did chop for a little bit more, but it was really just another month and a half, no, less than a month and a half. It was a month, 5 weeks or so before we hit that August 5th bottom. And then we were pretty much up only from there until December. So same deal. Here we are. Last time volatility was this low, we saw a significant move over the next several months. And so does that mean that we're going to see a significant move in the next several months? Does this mean also that we're talking about 5 weeks? I would say no. The fact that that was in the middle of the summer in the Northern Hemisphere, at least, and we're talking about May, that's a bit of a difference. It's not an insignificant difference to the point where I don't think we're going to have to wait for 5 weeks before we see a new all-time high for Bitcoin. Last time volatility was this low, Bitcoin's price was a decent amount lower than its previous all-time high. Now we're seeing volatility low when Bitcoin's price is knocking on the door of its previous all-time high. So there are some differences, again, that would make me think that we will see new all-time highs sooner rather than later. Moving on, though, Dr. Cat X Bitcoin without Ichimoku, what do you see? You simply see a neutral range that doesn't tell you anything. And I don't mind this range, buy at the bottom, sell at the top, or short, long at the bottom, short at the top, something like that. But with Ichimoku, you see that the 4-hour time frame is on the edge of flipping bullish since the first time that the range started. So let me make this as simple as possible. We pump initially, and there's resistance all over the place. The green line, resistance, point of control, resistance. Okay. Anyway, but then, where is support? Support is much lower than where the price is. And so, we could have gone all the way back down to the mid 90s and remain bullish, but then we catch up over time to the cloud. The cloud establishes some support. We gain support at key levels, and now there's no resistance above us, according to the Ichimoku cloud. And so maybe now we are ready to climb higher. Maybe this is the week where Bitcoin hits a new all-time high. Just something from a TA perspective to pay attention to. You compare the range, you see the big pump, and you're like, I don't know, man. I don't know if now's the time to buy. And your instinct is actually pretty accurate when you see a big pump like that, because we could always come back and fill some candles there. But when you factor Ichimoku in, you see a lot more confidence in opening some longs or buying Bitcoin. Moving on. All right. So this is not necessarily bullish, but it's okay. And I want to explain it in the next slide as well. Here's a look at the Bitcoin liquidation landscape right now. So last week I showed you a chart where this was kind of flipped, where there was a lot of resistance not a resistance, but a lot of people that had shorts opened at around 105, upper 104, 105, which meant that if we were to break through that level, that would be heavy liquidations. And it's kind of flipped this week. So, the short sellers, they're getting a little bit less confident in their shorting. Is that a good sign? Sure. And then there's liquidations that if we were to lose certain levels, 102 or worse than that, lower than that it may be a significant long squeeze and the price would go down. So right now, just something to keep in mind, the market makers, Binance, BitMEX, Bybit, OKX, they have more money to be made with the price going down than they do with it going up. That doesn't necessarily mean that's what they're going to do, but there is some pain to the downside that could be exacerbated by liquidations. Now, I will say, don't be too sad. Let's look at the next slide here. This is in relation to low volatility, low search interest, low lots of things. Here's the fascinating. This is different. This time looks much different than any rally that we've had this cycle. So Bitcoin, this entire impulse has been unique in the sense that it is largely driven by a passive bid. I first identified this dynamic over 2 weeks ago, and it's what led me to believe that this rally actually has legs to it, quoted post. There's been relentless taker selling, especially in the spot market, but despite this, prices have continued to grind up. Why is this unique? Bitcoin has a massive spot premium. Larger taking is taker selling in spot, large spot premium, and prices have continued to grind up. That's a very unique combo. It signals some entities have been hiding in the order book, absorbing all the supply being dumped. Lots of whale buyings, lots of whale buying with resources, with power to buy OTC, huh? A few entities have accumulated a lot of Bitcoin through this run-up, maybe an OTC desk, or other passive participant. In better words, this move has not really been driven by emotions. This is much different than the ETF pump and the election pump. Inject that in my veins, guys, I'm telling you, which is why my belief has been Bitcoin will soon print an all-time high and that this rally isn't over until we see the perp market get overly euphoric. End of 2021, anybody? It was insane. And early 2021 as well. We are not anywhere near there. You can see what the perp market did in November of 2024. We got really excited. We got really motivated to make some gains. Maybe we got left behind, and so we decided, we're going to do some high leverage and make all sorts of money. And, well, look at it now. Not anywhere near the same as where we were. Excuse me, that's not end of the year, but for sure, end of 2024 was what perp volume was like. So perp, spot, grinding down, whales are buying aggressively. Doesn't seem like there's a lot of belief in this rally that we're going to hit any kind of euphoria. And yet, here we are, and looking good for another leg higher. Let's moving on. In today's Could It Be So Simple? I've never noticed this, and I'm really disappointed in myself that I've never noticed this. Because if you're looking for a perfect bear market bottom to buy, this is actually better. The signal that I've been paying attention to has been the 200-day moving average. But this has proved itself to be a better buying indicator than the 200-week simple moving average. What is this? Bitcoin cycle top. Imagine if it ends up being this easy. Buy at CVDD, Sell at terminal price, millions of analysis over 3 years for nothing. Terminal price is now at 216. Hey, that sounds great. Let's do that. Do I think we're getting to 216? Not in 2025, but eventually, maybe 2026, 2027. What's CVDD, you wonder? CVDD stands for Cumulative Value Days Destroyed. And that is just older coins they sell, and the average, the age of the coins gets, the price of the coins, the average price of the coins gets higher, So CVDD, Cumulative Value Coin Days Destroyed. And that gives us a nice average price. So what do we have for where CVDD is right now? It's $34,000. Of course, it's rising as coin days get destroyed, as the price goes up, as selling pressure from the whales, selling pressure increases on long-term holders, and they decide, you know what, I'm going to be taking some profits here. That causes the CVDD to rise. And my goodness, this has been a perfect, an absolutely perfect place to buy. Literally every bear market. And why have I not paid attention to this? Why have I not alerted people to this? I'm frustrated myself. I should have noticed this. For me, my eyes were on the 200 week, but it's been really just a fantastic place. It gets nearer to the CVDD line, you buy. So, and the even really fascinating thing to me is also, last two bear markets, at least, we spent a decent amount of time at that level. So, all right, pay attention. Keep that in your file. If there's any one thing from this video to keep that in your file, here we go. CVDD. 2 billion Bitcoin in the future seems like a reasonable outcome. This is my last Bitcoin chart. I just decided let's have some fun with the last Bitcoin chart. Webull, not Webull, the Robinhood competitor, but Webull versus Power Law for decades to come. Most likely the two will be indistinguishable. Okay, all right. So when would we reach $2 billion per coin? I'll be dead. I will definitely be dead. 2090 would be $1 billion. And actually, this isn't the last thing that I see. So maybe 2100. So am I motivated to stack my sats if this is actually how it plays itself out? And I don't care if it doesn't. But if this is actually how it plays itself out, are you motivated to stack your sats? I hope you are. When would 10 million be? That would be mid 2040s. That sounds about right. I hope you are, and here's why. There's an Indian proverb, a nation, I'm going to totally butcher this. A nation is blessed or prosperous or something when a man plants a tree under whose shade he will not enjoy. And that is the definition of my life right now. And I hope it's yours too. That I'm trying to plant trees that my children, my grandchildren, my great-grandchildren, they will enjoy that shade. Here's an opportunity. I really do believe that. There was another thing, another Bitcoin thing. I guess not. Oh, here it is. I meant to have it here. Just a really interesting thing to pay attention to. Where are we going to go from here? So days Bitcoin has spent in price ranges. $1 to $10, 412 days. $10 to $100, 352 days. $100 to $1,000, 356 days, but then $1,000 to $10,000, only 1,115 days. 10,000 to 100,000, 1,882 days, and 100,000 to 1,000,000, 37 days. So I'm very curious to see what it looks like for this range, 100,000 to 1,000,000. How long is it going to take? If you see, 10,000 to 100,000 with 1,882 days, maybe it would be something like 3,000 days. 3,000 days is 8 years, something like that. I don't know. Just would love to hear your thoughts. Where do you think we're going to go? Different, really interesting exercise, and really interesting to see that, the time spent between 1,000 and 10,000 was shorter than the time spent between, sorry, did I get that right? No, but the time spent between 100 and 1,000 was longer than the time spent between 1,000 and 10,000. So, okay, moving on. Altcoin market cap Pentoshi. Yikes. The altcoin market cap is the same as it was 1,500 days ago. Honestly, pretty wild, LMAO. Think of all the "it's so over and we are so backs" that have happened in that time. And, oh, phew, okay, I don't know who this is, but, oh, I follow him. I do know who this is. Okay. Include the fact that there are infinitely more coins now than then, and you get those horrendous individual charts. Many crap coins have that's it. And I just want to remind you guys, I'm exhausted of there's so many more coins now, all right? The total crypto market cap has not gotten anywhere near where people have projected it to go. So it's not entirely due to the fact that there's so many more coins now. People have projected 7 trillion, 10 trillion. We haven't gotten close to that yet. The number of coins does not matter. So we need to think of other reasons why the altcoin market cap is where it is right now. And let me give you a proposal. It's because, those of you who subscribe to my channel, you know where I'm going with this. It's because financial conditions are not aligned with an explosive risk-off activity yet. That and that reason alone, who could have seen this coming? Well, if you were to see me, I'd have 2 thumbs pointing to myself, and I know a handful of other people as well. Moving on, this is there's going to be 3 charts here that may only interest me, but it's something to keep in mind. So, global markets investor. Households own more stocks than ever before. U.S. households' allocation to equities hit 43.4%, an all-time high. By comparison, at the dot-com boom, bubble peak, the share was 38.4%. At the same time, allocation to cash and bonds sits at historically low levels. Remarkable. So why? Why would U.S. households allocation to equities, 43.4% of U.S. households be holding stocks? Seems pretty simple to me. 2 reasons, big reasons. One, Robinhood. It's so easy, but not just Robinhood, lots of other places as well. It's so easy to own stocks now. It's so much easier. Transfer money from your bank to Robinhood, buy stocks. Dot-com bubble, it was not like that. I remember when I, first had my own account set up, it was E-Trade, and you're going to be shocked. You might be shocked by this. Some of you younger people, every trade cost $10. Every trade. If I bought something, I paid a $10 fee. If I sold something, I paid a $10 fee. That's not the case anymore. It's just become so much easier. You can trade on the toilet. So, but the other thing is, the other reason why this would be the case, in my opinion at least, is faith in the dollar. We see allocation to cash and bonds. It's at historically low levels. Yeah, faith in the dollar is diminishing because you guys are printing like crazy. So, moving on. Another chart that may interest only me. I'm really fascinated by this chart. So we have some from Zero Hedge here. Small business payroll growth in April 2025 was much stronger in Texas/southern cities, while Boston, Phoenix, Chicago, New York worst. May explain why Dems have an apocalyptic economic outlook. Really interesting. Really interesting. So the South, San Antonio, Houston, Austin, Charlotte, Miami, Dallas are the top 6. San Francisco is number 7. Okay, all right. Yes, I get it. But yeah, then after that, it's a series of cities and blue places for sure. So it's really interesting to see the perspective of people on different sides of the aisle. I saw this video on TikTok from this guy. I thought he was gay. And so he was talking about how much optimism there was, how much belief now in comparison to the past in America that there is. And I thought for sure, man, that the other shoe was going to drop, and he was being dead serious. And then, I see my liberal friends on Facebook, and they're in full-blown despair mode. Some of you have pointed out a certain influencer on X. I won't name him, not on X, on TikTok. I won't name him, but he did call for Bitcoin to go to a much lower price in April and in May than it went. And I think it's because he's a Democrat. He had an exaggerated perspective on what the market was going to look like in April and May because he just thinks it's Armageddon right now. And look at Boston, my goodness. You know, Massachusetts is the most liberal state in the United States. And I guess it's turning into a self-fulfilling prophecy no matter what you believe. But here's my belief. Believe that you can win. That's all I'll say. No matter what happens, believe that you can win. Another chart that may interest only me. Just out of curiosity, can you imagine how Europe will look like in 20 years? So sub-Saharan Africa, Europe, UN population projections. My goodness, it's growing dramatically in sub-Saharan Africa. I know, Nigeria is going to flip the United States within our lifetimes when it comes to population. At one point, there's going to be 3.5 trillion in 2100. Whereas Europe has peaked already. Oh, man. Something got stuck in my throat, some saliva or something. But here's the really fascinating thing. I listened to this message. This was about 20 years ago, actually, a talk saying that Europe was going to be predominantly Muslim within 2 generations. And here we are, 1 generation into it, and it seems like there's, why Muslims have a lot of kids. It seems like the trends are changing. It's unstoppable. And mainly because native Europeans do not have that many kids. In Spain, I think it's 1.4 children per family. And for Muslims immigrating into the country, it's 6 children per family. So this world is going to look a lot different for the next generations. My goodness. Just trying to think through, planting that tree under whose shade I will not rest, what this looks like. And last chart that might only interest me, everyone's favorite Wall Streeter with arguably the best movie made based off of a person in The Big Short, Michael Burry, liquidated every single position in his portfolio. Yikes. FYI, he might be a little early, just like he was early with The Big Short, but I don't think he's wrong. So every single position in his portfolio except for Estee Lauder. Estee Lauder, of all things. Look at that nasty, filthy chart, but with that said, it also looks way overdue. This gets the triple rare 3-eye emoji from me. So Estee Lauder peaked a little under $400. Now it's at $663.67. So why would Michael Burry not sell this? You may think it's because he doesn't want to hold on to a loser. But this book that I read, Best Loser Win, you dump your losers. You hold on and you add to your winners. And Michael Burry is not a dumb man. So there may be an overreaction that he's processing with luxury brands. We saw with the tariffs in China, luxury brands dump really hard as people realized that I don't know, these famous purses or whatever. Insert famous purse here. You can make it for like $1 in China, and yet it's selling for $1,000 or something like that. That maybe there's an opportunity short term for a dead cat bounce on some of these stocks. Estee Lauder, Chanel, Versace, things like that. That's about the extent of my luxury knowledge. But anyway, all right. That is all I have for today. I hope you have a wonderful day, a wonderful rest of your week. I will most certainly be seeing you in another video.